That'll get
Welcome back, Market Mastery, the 1 hour you need the market to make money, covering all the top names, all the top trades that you need as an investor to make money in a market, whether it goes up or down. We got some exciting stuff for you today. We are going to be breaking down your SPY options trades as always, so you can trade a bull and bear market with ease. We are going to break down some of your favorite names, such as Palantir, Tesla, with a 2025 look ahead, talk about what we expect with those names, and we are going to cover a few more and then play a little smash or pass where you guys get to give us the ticker that you want us to cover, and we will cover it for you and talk about what we like and what we don't like on that name to go long right now. Let's get into it. Let's go right into the overall markets here. Apple being one of the top leaders has fallen off a little bit today. NVIDIA holding up 0.35% as far as tech goes. Everything else pretty red across the board. As you can see here, we're not seeing much green outside of energy, and even then it is fleeting. So to take a little bit of a closer look in at the SPY here, we can see, we take these drawings off for you so you can get a better look at this. You can see that this price action has been slowly foaming off the top. However, it still continues to climb higher. And I know the question on everyone's mind is, are we going to get that Trump pump into 2025, or are we going to see some pullback? And I would say that right now you have a pretty good, clear picture on what's going to happen in all the analysis we've given you every week. I will be publishing this chart to my TradingView account. If you do not follow it, go to TradingView and follow this account, Penny Boys, one word. I am posting this chart so you don't have to go through and do all this work all over again. Plus, this is a psychotic chart. So we talked about a potential support test off this white line last week when we were in our stream on Friday. As you can see, our analysis held up perfectly, and we closed above that price, telling me that we were going to make some money. Last week, let's do a quick recap. We talked about if we break below 598, we are going to take the 583 puts. Those would have paid you over 100%. Congratulations if you followed those trades. I'm going to put the overlay here. If you want real-time updates on these options trades, as well as live stream coaching and access to every trade, click that QR link, or sorry, not click that. Take a picture with your phone of that QR code, or screenshot this and then save it for later so that you can get access to those trades. Again, this SPY trade, this one trade I gave you last week, paid off over 100%. We held up at support. I expect us to continue to hold the support and retest 595. That being said, our first SPY options trade for the week is going to be the bullish case. So we want to look at both sides to make money. Let me pull this up here for you. So we would be going at least 14 days out. I'm liking January 13 for expiration. We're trading at 588. We would be looking to hit 595. So the 595 calls are about $300 for January 13 expiration. Those would be at entry right now on this trend line. If this trend line holds, those calls are good. If it doesn't, puts are in play, and I'll be aiming at 574. So we're going to go over to the put chain. Same expiration, January 13th, except I'm looking at puts here. I would be looking at, better yet, let's go 583 again. We're going to go 583 again if they even have it on this chain. They don't for January 13th. So it looks like we're going 585. Those are trading at about $463. So the bull trade, as we just gave you, the bear trade is the 585 puts for January 13. Again, the bearish case is if we break this trend line and come down. Bullish case is if we hold this trend line and go up. Those are your two scenarios that you can watch for the week. Again, we have given you 2 winning options trades every week for almost 50 weeks in a row. So I hope you guys are following these and following these charts, because I have been loading these up for you every single week. I expect more sell-off, but right now, as long as we hold this trend, the chart's going to hold up. Shai, what do you think about this? I'll give myself a 2-second breather here.
Yeah, absolutely. So I think SPY and the whole market, let me reverse back a bit. Past couple of weeks, I've been very vocal that I think January will be an ugly month for the indices, largely because of large cap tech and a select few of semiconductors, but really it's large cap tech. There's going to be profit taking that's going to occur. There's going to be no more cap gains worries. There's going to be a repositioning that's going to happen. Large cap tech's going to get reverted back to lagging high quality small caps, software stocks, the mid cap growth. Like that's kind of where you want to be in 2025. And you're going to see that repositioning start to occur. I think we're getting ahead of it now. Before I thought it was going to happen in January, but I think people are front running it a bit. That combined with the 10-year yield is an absolute issue. It's being extremely stubborn, and it's above 4.5. I think it's 4.6%. So really, that is the benchmark to tell if a market's going to start recovering or continuing to pull back. Just look at the 10-year yield. This needs to be closer to the 4% rather than where it is right now, hovering above 4.5%. And if it hits 5%, watch out. I've also been saying I think SPY hits 550 sometime in Q1 or sometime in 2025. I think if the 10-year yield hits 5%, I think the sell-off intensifies. And mainly because who's buying this dip really right now at the end of the year? Like a lot of people in past 2 years have made significantly more than what their expectations were. So why would you risk the biscuit on this 5% pullback to add? Like you just don't. It doesn't make sense to. There isn't enough blood in the water. Like for me, I've been sprinkling some ads past couple of days on a select few holdings, but really I'm not adding as aggressive as I usually would with the market just pulling back a couple percentages or whatnot. Like I'm being very tamed with my ads because I do see more blood in the water coming. I think if the 10-year yield doesn't give out, which it doesn't look like it's going to, like we're going to have some issues. And I think this is coming at a time where earnings season starts in a couple weeks. We have a new president starting to take office. Trump-led presidency is highly volatile. I think it's so bullish for the market, but it does bring noise, and the market does not like uncertainty. So I think that's causing some squeamishness. So I just think large cap tech is just driving this market down. Like today, for example, what Qs or Nasdaq was down 1.5%. Growth tech wasn't down that much. I'm seeing Palantir is down 1.5%. Snowflake down 2%. Trade Desk 1%. Global E 1%. And Nvidia was barely red. Barely red. It was really large cap tech drove this market down. It's going back to my thesis. Like that's not where you really want to be. I think that the next tailwind for large cap tech is going to be agentic AI, but I don't know if that's going to happen next couple of months. So I just think you have to be very selective of where you want your exposure in. And I think whoever's buying Microsoft and Apple, please stop. Like that is not a good purchase at this valuation right now. I think Amazon, you have to ask yourself what's holdings have some catalysts in the next 12 months. And that's where you kind of want your exposure in. It's not the previous winners. It's not the winners in 2023, 2024. It's not like every year is a new chapter in investing. Don't dictate your future behavior based on what's happened in the past. That will burn you. So you have to ask what's next, what's the future, and what's the next catalyst for large cap tech. I don't know. I think there's going to be some kind of a ROI discussion in the boardrooms on their AI related investments. That's going to hit semiconductors. Semiconductors are going to be somewhat squeamish due to tariffs potentially arising from Trump becoming president. That's going to create FUD until we get some clarity in that. Like there's just so much noise for large cap tech and semis that you made your buck. Just go elsewhere and find out the next opportunity. So I'd be worried about SPY. I think us not having a Santa rally tells you everything you need to know about January, what January is going to be like. And I do think January will be somewhat bloody if we don't see some kind of buying ahead of it.
Yeah, I mean, I think today we can scoot back a little bit to Jesus, where's the date? How do you move this back to look over the last? Oh, there we go. Last week. I mean, even the last week we haven't seen much. And then if you keep going back, the last month isn't very green. Like you got a few names obviously outperforming, but overall, look at this for the last month. We've not been performing well. And I think, again, a few names carrying the weight, which a lot of which are the ones that we've been adding. So Kobe, but yeah, I'd say that, right now it's just about positioning yourself for the truth of what's to come. So this brings me back to, and again, I hate that I didn't know you back then because I think you and I would have crushed it, which we were on the same page. We didn't know each other then. But in 2021, when I was telling everyone, like, dude, holy shit, tech is the new value investing. Like, this is psycho, but it is. And everybody's like, you're an idiot. And I was like, all right, we'll see. And then we start talking about how the tech AI innovation wave is going to be like the big runner. And then the basket of tech is going to be the underlying growth performer. And obviously, you and I both capitalized on that trend. And then we met each other. That's why it was like kismet. It made sense. But I think people are kind of not realizing that this is different. It's a different. That's what I always like to think about. Like, is this market like okay? So all the big pundits, right? Like all the analysts and the big pundits that are used to talking about this stuff, they're familiarized with a different type of market. No one has traded pandemic, like global shutdown, not just sick, global shutdown, supply chain crunch, ridiculous price gouging. Like, call it inflation all you want. It was price gouging. It hasn't left. Even though the supply chain issues have been solved and were solved within months, the price has stayed the same. Price gouging. Multiple wars breaking out on multiple fronts, right? And then on top of that, global uncertainty. What's China doing? What are they up to? Does North Korea have nuclear missiles, and are they going to fire them at us? Are they at war with South Korea? You know, what's going on? Let's invade Taiwan. Let's not invade Taiwan. Like, who knows? Let's do it. Hey, Nvidia's producing a lot of chips. It's like, well, surprise, they're basically monopoly. Let's give them all the money, right?
I mean, also people are forgetting there's a Russia-Ukraine war still happening. It's like that's not over.
No, so it's like you take all that into consideration. The people that are talking about the macros of this market, which shape the market, have never been here before. None of us have, which is why there's more of an equal playing field than there ever has been before. And those who could think in a more innovative fashion and see ahead of the curve a little more are going to benefit. That's why we're doing so well this year, outperforming all general indices, all general markets. I think that like there needs to be a grain of salt with all of this kind of bear posting, even to say like bear or bull posting, right? Like what really should we even have any expectation right now? Or would that be ill-advised? Because I think right now it's, again, I think it's smarter to play the individual names than it is anything else. You have a lot more control over that environment.
It's going to be a stock pickers market absolutely for the next couple of years. And I am seeing some comments like don't think a bear market's going to happen. I'm not bearish on the market anymore. I think there's going to be a pullback to 550, which is where the 200-day SMA is on SPY, which has not been tested once in 2024. That someone find that statistic out there. Like I think that's maybe one of a couple times in the history of the market where the actual S&P 500 never got retested towards their 200-day SMA. Like that's so freaking rare, and that just shows that we are somewhat extended for somewhat of a gut check. And that gut check is that 200-day SMA, because if that slices through, that's the beginning of a stage 4 breakdown on a chart. That's dangerous. You never want to be a part of a stage 4 breakdown on a chart. Like that's when things get really ugly. So I think that we're going to retest that and we're going to bounce. We're just going to bounce up there. But I do think the days of a V-shaped recovery are somewhat over. I think there is a high floor in any pullback because there's still trillions of dollars on the sideline, and the Fed are going to continue to cut rates. I think what they indicated a couple weeks ago was it's not going to be maybe 100 basis points in 2025. It's going to be maybe 50 to 75, and we'll see from there. That caused the 10-year yield to spike, and that's a no bueno for the stock market. So now we're just readjusting, re-rating. But in 2 months, if the data persists, like we might get 100 basis points again in 2025, and that's a different story. I forgot what it was this time last year, but I think the market was pricing in 6 or 7 rate cuts in 2024. That's like the market prices ridiculous amount upside or downside on rate cuts. Nobody really knows until the data occurs, and then we find out the following Fed meeting. So I think right now it's just a repositioning that's occurring. However, this is really this pullback's purely a bond and 10-year interest rate issue, and that's one of them has to give. And I do think the 10-year yield is going to revert towards 4%. I don't think it's going to go 5% plus, but in that reversion, I think there's going to be a lot of FUD that's going to cause SPY to go to 550. And if it does, that's a 7 to 8% correction. And I think a lot of people will be buying that. And I think a lot of people will kind of want that dip. That's the thing. Like, I think a lot of people weren't participating as much in the Q4. And you kind of saw that with the past 12-month heat map. And for myself, like in Austin, like we weren't participating as much in Q4. Like the market's just got taken off in past 2 years that we want to have enough dry powder for volatility in a Trump-led presidency, which there will be. So I don't think we're in a bear market. However, I do think the times of like 2023, 2024 of just V-shaped recovery, things up to the right, it's not going to be like that anymore. It's going to be much more up, down. Like we might have massive swings upward, massive swings downward, and end up being up 5% at the end of the year. Like that's the kind of 2025 I'm anticipating.
Yeah. I mean, what's interesting is I didn't realize, let's go back to the same date. So let's do it to 2003. I didn't realize that TLT, like the 20-year ran alongside the S&P for all those years and then crashed, right? 21. This is more a function of money supply, right?
Yeah, it's liquidity.
Okay. So then what does that mean? That it is breaking all-time low. It's about to break all-time lows and go lower.
I mean, I wouldn't. TLT play isn't the worst play to have in 2025. It really isn't. Like if you're bullish on, I think it would make somewhat sense if you want to get rid of your IWM calls. If you're bullish on IWM, transitioning that to TLT because IWM won't run without TLT, and I think TLT has somewhat more predictability than IWM. So that is something to monitor for sure.
Huh. Because you'll also notice, look at volume inflows, just total, SPY, and TLT, up, down. That's interesting to me. Very interesting. And a SPY true to trend line without the expressive volatility puts us at like 450, 470. That's where we should be right now. Right? That's volatility off the line.
Could you imagine if the market dipped 15 more percent of like the blood? I think a lot of people are like forgot those days where like there's dead years. Like there is dead years of nothing much happening, market being red. It's not up to the right like everyone's used to right now. I do think that this is a time where like
that was a 25% move.
Oof.
This one was 25%.
That's
it
wild.
looks like that's what we're kind of setting up for here. Personally, because I mean, just look at that.
I mean, we can even let's get a little micro then. SPY got rejected. Like the 50-day SMA on SPY has been somewhat of a good bouncing point. Like it's been bought the dip. Or if you want to go on let's go on the weekly for chart. Weekly's better. So the first, like before we hit 550, 553 range.
You want the weekly, you said?
Yeah, see the weekly. The first major test, like we have to maintain this because it's been the trend that's been maintained since the rally began. It began in 2023. The 21 EMA on the weekly chart. The 21 EMA on the weekly chart has been the support for any pullback in the market the past 2 years. Every single one. The one that occurred in April of 2024, the one that occurred in August 2024 with the yen carry trade crisis, even the one in September, even the one, what's another one before that? August 2023, like summer 2023, like every one of these dips on SPY has bounced on the 21 EMA on the weekly chart. That 21 EMA level right now is 580. 580 is a massive, massive level for the market. And I think that if the selling accelerates, like today we're down 1.2%. If we have another day like this tomorrow, we might be beginning the new year close to 520. So I do think that 580, like that's a good gut check to see if like we're going to revert back towards that 550 level.
Yeah, I'd love that. Consolidation, 570, give or take.
Yeah, 100%. So like, again, like if you guys are long-term investors, like you invite this kind of volatility. Like I'm a perma bull. I'm always invested. I think that the market has legs to this rally. Like, it's not going to unwind. We're not going to hit this bear market that's going to occur and they're going to be done for the next couple of years. I just think that it's been too easy. We have too many, like people's heads are getting too big. This game isn't meant to be this easy. And it's kind of been like that the past 2 years. Like everything's been going up to the right. It's not usually the case. Like it's much more volatility up, down. Like there's a lot more fear. There's a lot more greed. Like it's just like, I just think that we need a gut check. And I think that 580 is a very important first test on this bull market. If we slice through that, this is a new characteristic in the market. Like that trend line has been defended for 2 years. And then we go from there. So it is one of those instances where you're going to see some FUD headlines out there. Like people are going to say, oh, the bubble burst, is the market rally over? Are we going to revert back towards, I don't know, like what Austin said, in mid 400s? Like, I think that's going to be way too aggressive. I think any major dip is going to get bought because the trillions of dollars on the sideline. Like it's going to. And I think that rates getting cuts as we begin the new, like the Feds are just beginning that rate cut cycle. It's not going to end. Like it's going to continue for the next couple of years. That's going to make having all that capital on the sidelines, getting that 5.5% guarantee interest rate, which is now closer to 4.5%. Like that's starting to dwindle down. And I think a lot of working capital, trillions of dollars, are going to need to be allocated now in the market. And those dips, those major dips, will get bought. But it's not going to happen in December. People take the month of December off on the street. Like these large institutions, large hedge funds, like they take the year off. Like once December starts, they're done. So like it's not going to really occur, these dip buying opportunities right now. And that's where you're seeing it. Low volume pullbacks. There just really isn't that much liquidity. January, we're going to see. But yeah, that's my 2 cents on that.
All right, let's pull up. Let's pull up this one. Feels like it's been a while, but I don't think it has. So Palantir, obviously, straight up a rocket boost into space. Huge win. Again, discussed as many a times. Still holding my position from $7, give or take, cost basis. We've talked about the chart on this one. We've got some key levels here. Looking for 108 as the next target if we stay above 69. I just know that for a lot of you, if you missed the original trade, you're like, well, okay, where can I get in now? I would say that I would love to see some consolidation above $69. That would be pretty critical. It needs to come down. Like it's run too much. It just needs a breather. Volume was still very strong over 69, which is huge. I mean, so if you get above 69, I think you've got a pretty strong bull case if it can consolidate there to set the next target at 108 a share. That's kind of what I'm seeing. Chai, what about you? Any thoughts?
I mean, I think Palantir is set up to be a dominant company for the rest of the decade. Now, you have to ask yourself, when does valuation come to play? I think Palantir is holding really strong during this pullback, like especially in their valuation is like it's through the roof, nosebleed valuation, but it's defending themselves pretty well. This SPY going down 4 to 5%. Like Palantir, it's gone down 7 to 8%. Like I expected much more volatility and a pullback on that name.
Yeah,
but people want Palantir. Like people know that they've cemented themselves in the post AI world as the clear stage 2 AI leader, and they're willing to pay up this premium valuation for it. Or institutions are. Let's just say institutions are willing to pay up for it because they have a long-term horizon. They have the capital to do so. Where retail is just like a lot of the Palantir bulls bought it for low 20s, teens. So they're not really buying it up here. And I think a lot of people are expecting this name to be like $30 in 2025. Like that's not going to happen. I think maybe we'll get a retest of like $50, maybe. But I think that Palantir is one of those names on any vicious pullback or macro-driven pullback in the market. I think they're going to be one of those names that get bought up because valuation is taking a backseat right now. It's all about who's going to not just survive in this post-AI world, who will thrive. And those names that will thrive are going to have unprecedented pricing power. Palantir is going to be one of those names. They've cemented themselves in that. And I think that has to be on everyone's list on any macro-driven pullback that's going to be a bloody year or month. If things get worse, like that's got to be one of the names on everyone's conviction list to get more exposure in. And I think people are just getting bought up every dip. Like I would love, I trimmed some in the 80s. Like it's still my number one position. It's not 15% anymore. It's more 11 to 12%. So it's substantial still for me, but I am offloading a bit at the valuation. Like it's got to grow 40% for the next like 4 or 5 years while maintaining their actually expanding their margins to like 35%. They have to have a rule 40 score of 70 plus for the next 4 years to kind of justify this valuation right now. And that's like They can do it. Maybe they'll do it, but that is a tall. That's
It's
a
a tall
tall
order.
ask. Yeah, 100%.
It'll, and I mean, realistically, it's like, I don't know, for any name like this, I feel like you just want to be cognizant of like the fact that it has just been explosive for almost an entire year without stopping. And I think that's one of the main kind of things to look at. So moving over to a name that has been ripping, but I don't think is fully done yet, and that would be Tesla. This was our entry called out at 140 a share on this exact stream. You can see that our levels are playing out perfectly here on Tesla, getting washed out below 440. That's our critical. That's our next critical price hurdle before we really see that longevity express itself in terms of the price. You can see that we got washed out there, and then we tested again and failed. But I would say the fact that we broke through on significant volume is a huge bull flag for this, like huge red, green flag, bullish signal. I just would like to see this come down, test maybe 386, give or take, and just follow trend of these two big boy candles. And then I think we're off to the races, and we're gonna move to $500.
I mean, yeah, I think 500 is inevitable for Tesla. I do think they listen. FSD alone, I've said this before. Autonomy and FSD alone is a $300 incremental increase in Tesla stock price. If they can hit that, and that reality is not, it's not sci-fi, it's a near-term reality in the next like 1 or 2 years. That alone is worth $300 in their stock price. We're also getting, so that's by itself. I think robotics is becoming a much near-term theme than a lot of people anticipate, and they're going to be one of the leaders of that as well. So now you have to ask, like, is Optimus actually not so far-fetched? Like, it's somewhat realistic in a couple of years, and then you have to add that valuation. And then EV industry has been, like, I know the interest rates are like being stubborn right now. It's like, I don't know how much consumer spending is going to accelerate, but I do know that IRA or that 7,500 credit, EV tax credit, EV credit is going to get removed somewhat in Trump-led presidency. And that might have a pull forward demand or like a vacuum of demand on Tesla cars because people want to capitalize on the 7,500 tax credit. And if they wait, they might have that removed. I think that's going to give them somewhat of a pull forward demand by the time like that they start feeling this EV tax credit. I think their competitors are going to feel 10x more than they will. So they're going to be a net positive on that impact long term. But hopefully by then, autonomy and FSD will become monetized around the corner and it won't really matter anymore. So that's why like that could be the perfect scenario for Tesla. And I might like Austin and I built an overweight position in Tesla under 200. We've communicated multiple times on there. You guys saw it's like we're in no rush to add above 400. So like we're sitting pretty. But if you guys don't have Tesla exposure, like this is like one of those names where, again, just like a Palantir, you have to monitor in 2025 for any macro-driven pullback to get that exposure because those are two names that are going to have monumental impact on enterprises and real world for the next decade plus. And the ceiling, nobody really knows the ceiling on it. Real world AI application, enterprise AI application, those two names. You're going to need exposure in that. If you don't, you're going to feel like a schmuck in a couple years. So that's kind of, I think Tesla and Palantir just have high floors, knowing both names will be thriving in the post AI world.
Yeah, I mean, I couldn't agree more, and it's been good to us so far. So we got a question.
Oh shoot, Austin, I think Austin, you cut out.
I was gonna say someone was asking about MongoDB. I just said, first of all, none of this is a recommendation to buy or sell. Let's make that very clear. You do what you're gonna do on your own dime, on your own accord. We're just showing you what we're doing. So as far as I'm concerned, I'll let Shai fill in his thoughts because he's a lot more versed on what they do as a business. But just looking at this purely as a play on the chart, this sell-off, this post-earnings sell-off, which obviously was a big fail, didn't play well in the market. It's held up better than I would have expected. And as we talked about last week, you got long-term, or 2 weeks ago, sorry, I forgot about Christmas, long-term trend support right here. This is where it would get interesting to me to add personally. I'll let Shai give you his thoughts real quick.
Did you say in the 80s?
In the 80s? No, it'd be like right here, maybe 215, 210.
Yeah, so I did add some MongoDB recently. There's an echo maybe on your end, Austin. for some reason on my voice. I don't know if anyone else is hearing that as well, but yeah, at MongoDB, they had a really bad earnings. They had a strong print. Their commentary on the call was a no bueno, especially in the Q4. They are notorious for sandbagging. That's why they have insane beats consistently. But this is one of those niches within data. A database is going to be a massive, massive segment of the post AI world. There's going to be multiple niches within that as well. The unstructured data component of it, or NoSQL, that's what MongoDB's domain is. And that's going to be an absolute necessity in the post AI world. However, the fundamentals are not really backing that right now. We got clean beats across the board, and they don't really qualify for the Rule 40 score, but it's a very cyclical business where a lot of applications use their database. So it's going to be it's very transactional. So business spending is going to be cause them to be highly vulnerable if things aren't going great. Business spending is now ramping back up. There's going to be a stupid amount of data that's going to be created in the next 1 or 2 years. Like, if you guys don't think it's going to be AI that's going to create it, I can promise you agentic AI will create 100x the amount of code that you think is going to be the max capacity. It's going to be a stupid amount of code, stupid amount of data, and you want exposure to consumption models, specifically databases or data infrastructure names. MongoDB is that. So I am confident that they will be part of that post-AI tech stack. However, it's not as a high conviction name for me as Snowflake is or Palantir. It's a top 10 position, but it's half the size probably of a Snowflake because it's risky. It's my Trojan horse of my starting 5 like stage 2 AI names. Like, I think I see a world in them, but it's not being reflected. And also the sell-off that's occurring, it's purely on their non-Atlas business. I'm bullish on MongoDB for their Atlas, and any kind of pullback that's driven by something that's outside my thesis, I'm buying. That's the same reason on Tesla. Like, I bought a lot of the Tesla dips on these car delivery misses or something about EV related. Like, I bought those because I'm buying it for AI and software, FSD autonomy. And it's starting to play out now. It got re-rated as an AI name rather than EV car company. And that's why you saw the it doubled in a matter of 6 months. I do think like that's kind of my strategy on MongoDB, but it is one of those frustrating names. Like, it's down let's see how much it's down. I think it's down 40% this year. It's definitely not pretty right now. It's down 43%. So like, you also have to ask yourself, like, how much FUD's being priced into the stock? I think a lot. So I think this is one of those names where I see it 500 a couple years. So like, I'm adding, and there's actually not that many great deals out there for high quality names. Like, there just isn't. There needs to be much more blood. So like, in the meantime, I'm sprinkling a couple shares a day on MongoDB. Oh, you're on mute, Austin.
I was muted. God damn it! That whole time I kept talking to you back and forth. And I was like, "Damn, he's talking over me. What the hell?" I was muted. I was like, "He doesn't usually do that. What the hell's going on?" Anyway, all right. So we're just gonna move right past as if it didn't happen. Drop your tickers for Smash or Pass. Let's get into it. We did have a question about the winner from last week. Did you announce that winner?
Yeah, we put it in the comments. I can see it. I could see it real quick. But yeah, we're not doing that this week. I don't have any bandwidth, unfortunately, for that one-on-one session.
Taking a little break.
Taking a little break towards the end of the year.
But here's what you can do. If you want to know what this man is thinking and how he's going to be playing this market, go to the link in his bio and get access to that. One of the best emails you ever get in your life as far as protecting your money. So make sure you hit the link in his bio. I'll put it across the bottom. That's his Twitter. To get access to that one-on-one or not, you can at least get those deep insights sent to you every single week. Let's get started on these. Start right at the top. Mr. Chad. All right, this is the only time we're doing it. This is a meme coin. Full disclosure, meme coins are extremely dangerous to trade. You should be extraordinarily careful in trading them, and only do it if you have a significant skill set or level of expertise and experience. So right here, we've had consistently downtrend. We have not been able to break it. A couple of big sells have held it down. Sideways consolidation is the best thing you could ask for at 2 million market cap. above 2.1 million market cap, this easily goes back to retest 3.6. If it goes above 3.6, I think we're going to test all-time highs, personally. So keep that in mind if that's when you're holding, buying, whatever. Trade it safely, trade it carefully. Meme coins are dangerous. Be careful. Jamia had a little bit of a pickup. Could not
I think
sustain.
I think Jumia is a great long-term opportunity. Solvency, they have no minimal solvency risk. I think they're going through a massive currency headwind issue. But again, it's one of those speculative names in my portfolio that I think belongs above $7 right now, and I think it's going to be one of those companies that
taking
catch
the
a
risk
major
on.
bid. Yeah.
Yeah. So we've talked about this many times. You got a strong demand zone, 281 to 465. Just expect buyers to accumulate there. This is the channel it needs to go in. So right here, you see these two lines. This is the trend channel we need to see it climb back into for it to remain bullish and head back to $9-10. If it doesn't, then it's probably going to come down and continue to test these bottoms, but it also gives you a great opportunity for long-term ads, which is what I will be doing. But below 284, I would say it's cooked and it's going to find a new low, and you don't want to be on that ride when it happens. So TMDX, see if it's held. I didn't even look at this one. Let's see if it's held 60. Oh, just below. Oh, broke that range. No bueno.
And broke it. I did add today. It looks like it's going to hit 55. I think this is one of the best opportunities in 2025. Until I'm proven again, I could be wrong. I'm not seeing anything in the thesis, my thesis being wrong in this name. I still think it's going to be above $200 next couple years. I just think it's narrative false price action, and that's what you're seeing right now. And it won't be until their earnings to buck that narrative. It's the same, very similar thing as Snowflake. Everyone hated Snowflake for the whole 2 years when it went down to 115, 120. Now, even though it's pulling back to 155, like it had that massive run up from that earnings reports. And now you're seeing analysts on the street. You're seeing a lot of people now say, oh, Snowflake belongs in this conversation in Palantir, Tesla for stage 2 AI. Narrative false price action. I think this is a great opportunity for TMDX, and it's a high conviction name for me, but we'll have to see. Like, that's the thing. Like, you guys know I'm bullish on TMDX. Still am, but they need their earnings to buck this narrative issue.
Yeah, I agree. MU, I just had that chart up. That chart looked atrocious. This chart is bad. This is real bad. This is like, I gotta move back. I gotta move back home. Mom and dad, things are not going well. I need to reposition. This chart does not look good. I think we're heading back $70. At which point then it becomes a little more attractive and interesting. But keep in mind, I think this thing's got room to go back down to 52 and retest these lows if it doesn't get a quick support pickup at 65.
I mean, Micron has a memory. It's a narrative issue, another narrative issue. Like, people are saying memory is a commodity. There's too much competition, low margins, and they're cannibalizing each other's take rate. I think Micron is a good, if you're bullish on Blackwell for NVIDIA, I think Micron is a great name to capitalize on that, especially how cheap they're trading, like, I think 10 times their PE. Don't quote me on that, but it's just so freaking cheap right now that if memory isn't a commodity, this is one of those names that can just run. But also, like, I think there's better opportunities out there. There's just too much noise around Micron, especially with the cyclicality of their business. It's tricky. Yeah, they're trading at 11 times PE. That's crazy.
Yeah, I think that this one is unfortunately just casualty of war. You know what I mean? Like, what else can you do at a certain point? I don't think there's really anything you can do. The market's just not up for it. I feel like everyone rode the NVIDIA train, and regardless of the reality here, like, hey, we can compete on a certain scale, and we should be trading at 4 or 5 times this. The market's like, you know what? I'm tired, man. I already got my money in NVIDIA. I'll just leave it there. You know what I mean? I feel like they've just captured so much of the give a shit that the market can't compensate for that. Like, the hype is gone.
Well,
I feel like there's a bearish sentiment. I'm just going to say, I know it's going to piss everyone off. There is not the same pizzazz right now for the market that I think there was a year ago.
You're not wrong. It's people are just the cyclicality risk associated with semiconductors. It's causing people to get like squeamish if we're at the end, than closer to the end than the beginning. And I don't know. It's just
Yeah.
weird. Micron's weird because like they should be doing really well right now with Blackwell, like ramping up, and they also have Ruben coming up after that. Like they should be doing somewhat well. We're trading at 20, 25 PE, not 11. It's weird.
But I will also say, keep in mind, like on the whole, still trading in an uptrend from 2015. So like it's solid. It's just this was too expressive. Remember, when you look at trend, it's just like if you ever walked a dog before, if anyone could think about what it's like walking a dog, they're going back and forth across the sidewalk, right? The only way they can get back to one side or the other is by crossing back through that midpoint, right? Because you're holding them on the leash. So the midline, right, obviously is your hand holding that leash, and the dog is the price action. It always comes back through that midline. So keep that in mind. So as it goes up, it's going to come down. You just need to find that midline to know where it's time to add or where it's time to flip your position because it's going to head the other way. So with this one, I think it's just it was too much up too quickly. And that's it, and that's all. Like NVIDIA run was like FOMO froth market. That was just like the pinnacle of hype and FOMO, capitalizing on an actual good opportunity. So when you get that weird perfect storm, Palantir, NVIDIA, like of hype driven by a basis that's rooted in reality that is very optimistic, very bullish, and then you get retail following off the back to just kick it up 10 times, dude, you're going to boom time. So I've never heard of HIMX. So that's a pass on me for MU. Doesn't be a no from me, dog. What is HIMX? HIMAX? Climax?
Like
Timex?
it's something semiconductor related. Let me see. Yeah, Taiwanese semiconductor company. What do they do?
It's a nice consolidated pump and dump there. Does not want to go below $5 and change. And it looks like it is actually breaking out. So I'd say as long as it's above 865, let it ride. See what happens. You can go to 11. So above 865, look for 11.
China is 70% of their revenue, so keep that in mind if in a Trump-led presidency.
So again, follow the technicals above 865, trade it on momentum to 11. You can't lose that way. You just can't lose. If you this is not a buy and hold, this is a Momo trade over 865. I'd trade it to 11 with a firm stop loss at my entry or maybe 10% below. That's it, and that's all. Another name that's not real. Rigetti. Unbelievable, dude. Unbelievable.
I mean, it's because a lot of these quantum computing names are just getting re-rated. People thought they were decades away, and in reality, they're 2 to 5 years away. And now they are just have to re-rate these companies. I think all the companies combined is like less than $30 billion in market cap. And that's kind of wild because quantum computing can change so many different industries going forward where I think it's going to be there's going to be a winner in that space, which I think is IonQ, clearly. That's just going to become a massive company.
I don't know. It's crazy to me, but passes run too much. I'd say above 12, you're still bullish, but I don't think there's enough price data here to really take a nice trade on this one. And it's not something I'd want to hold long since it is riding on that narrative. Cleveland Cliffs. Wow. That's pretty brutal. Oof. Why is this doing so poorly? Weren't they negotiating a sale of the companies right by my house? This pollution is why I'll have cancer. So thanks, Cleveland Cliffs. But weren't they negotiating with like Nippon Steel or something in Japan and then it fell through? Is that you know anything about that?
This is not my lane. I feel like it's a commodity. So like I mean this commodity play or market. So I got no idea.
All right, pass. Coca-Cola, little Warren Buffett Express, dividend paying monster. Let's see. Most unbelievable chart in the business. They already had this map below 63. You got 59 and 55, and then you got some ridiculous long-term trend support there. So that was a hell of a buy in 2020 at 36. Doubled your money and got the dividends.
It's a great dividend play for sure.
Yeah. So there you go. Tammy coming with another ticker I've never heard of. Edwards Life Sciences. What is this? Oh. Downtrend is strong in this one, though. Yeah, that one's consolidating. That's dangerous. I would say above 66, just be very careful. Below 66, it looks like it's coming back down to 40. So you're going to lose half. PayPal, very interesting one. Look at that bottom scooper, dude. Come on now. Long term, I posted this for you guys in the Discord for those that are in our long-term options trade, which is up over 200%. Once again, if you want the actual trades that we craft around this analysis, scan that link or screenshot it and come back to it later so that you don't miss it. Posting these trades, we are covering them live every Friday. We sit in the lounge for an hour and break down why the trades make sense. If we break this long-term resistance right here, I think PayPal is going to retest 100, 150. There's huge little, this is just liquidation station right here. Price will move so quickly through there, in my opinion. If it breaks on strong volume, I think buyers will just eat it up. You have any thoughts on PayPal?
I just don't like the space, but it's breaking out. And it's been, I don't know, fintech names, they look cheap, but it's deceivingly cheap because none of them really have a moat besides Robinhood, which is UI experience. So take that what you weigh. Just make sure you have your technical, make sure you have a stop loss in place for any fintech name because they can always go lower and lower because they're all paper.
Yeah. Shopify. Still cooking. I love this over 87 still. I did take profit on a chunk of this position. Many of you know I was long on this from 31 bucks. I can't pass up a 300%er in the retirement. I tripled my wife's 401k. So I'm good with that. We left a couple in to ride, but I think we got a good run off that momentum. I'll let those couple shares ride and continue to grow. But I would say this one over 106, it's got to hold or it's going to get beaten to death. For those that ask, we just did RGTI. We also just did TMDX, just rewind there. Dell. What's Dell up to? Do you know anything about Dell? Have they stepped into the future? What's their core business now? Because it's not everything. It's still laptops.
No, it's servers now. They get into servers. They have a massive ecosystem. PCs, server, and they do. Honestly, there's a massive ecosystem, and I think they're starting to. The reason they caught a somewhat of a bid this year was that they're going to eat SMCI's lunch in the server business. I think they faded last earnings cycle because it didn't really move the needle as much as people anticipated. But yeah, Dell is a great, solid company. It really is great presence in enterprises.
All right, so yeah, I don't know, Dell. It's just crazy to me that it's still happening. Let's look at, because we got time for maybe one or two more. Let's look. We could do Baba. Chinese markets are going to be a little rough, guys. They're going to be a little rough. As I said, I closed the majority of my position. We got this run up to 120. It was beautiful while it lasted. We need this to stay above $80 for this trade to still be active. I don't have a high degree of confidence in it with the Trump-led presidency. I don't think China's going to play too well in this market. So I'd probably say pass unless we hold that 85, give or take. And then Kava. Is this Carvana, dude? This just pisses me off. Or is this different? Kava Group. What the hell is this Kava Group?
Oh, it's the Mediterranean Chipotle, essentially.
I don't. What's the market? What are they saying this is worth? I went there. It was good, but
No, it's being priced as the next Chipotle. That's the issue, and I think now it's getting their valuation was like dumb. I wrote the show report on Kava a couple of months ago. Yeah.
That.
So
stupid.
Great company, bad stock.
Yeah, it's crazy. So do you have any left that you wait on the ticker? Dave, is that really a ticker? Dave?
Yeah,
Dave Inc. What is this?
Fintech name.
No way.
It's doing really well actually.
I love this chart. I'm not gonna lie to you. This is a. Ooh, I like this chart. What the hell is it? What's Dave?
It's a fintech. It's like what's their competitor? It's a fintech name. It's like a payday lender. I want to say. Don't quote me if I'm wrong, but it's like I don't know. It's like again another fintech name that just what's special about them? What's their moats? I don't know. I really don't. I can't see a difference between any of their names, any of those companies. Like tomato.
I can't believe their tickers, Dave, dude. Digital banking service. Products include a budgeting tool to help members manage their upcoming bills to avoid overspending, cash advances. So they're Loan Shark is basically it. Oh, a side hustle product where Dave helps connect members with supplemental work opportunities. And Dave Banking, a modern checking account experience with valuable tools for building long-term financial health. Dave might be interesting for a lotto. I got to see what these are priced as because we can go way out of the money. It's not even close to where I would go. Oh, man. Small options chain. Yeah, no volume, no nothing. Because this chart is pretty strong. If this breaks 118, it could go to 190. I like this chart a lot, actually. How low did this go?
It was a reverse. It was a SPAC. And I think they did a reverse split, so that's why it looks a little wonky on the price.
Still, it went to $4, and then it 20x'd. In 2023. Damn, wish I'd have caught that one. Who would have known? So, win some, you lose some. Predatory loans. That is right. That's what it seems like. All right. There you have it. You got your SPY options trades. You know what's going on with NVIDIA, Tesla, Palantir, and all the like. You have now the ability to get alpha directly to your email inbox. Make sure you hit that love, hit that like, subscribe on YouTube, and as always, share this out if you found it valuable. The more we grow, the more we show. So we love y'all. Stay blessed now. Bye.